If you're seriously thinking about buying an investment property or your own home in the next 3 months, then this 10-minute video will change your life. In this video, we're going to talk about 6 simple steps that you can follow to not just get the market, the suburb, and the property right, but also negotiate and build an incredible team of advisors on the way.
So the first step in how to buy the right property is identifying the right market. What are your tips and tricks or simple things that you follow in identifying a market?
Noted. Now, obviously, Australia, which we're talking about in today's video, is not one market. There's a whole bunch of sub-markets. We've got the capital cities, the major regional markets, and the smaller regional markets surrounding that. So the first step for me or for you guys that could be good for this is having a look at something like HTW, Heron Todd White's month in review report. You can read a little bit about where each of the different markets are at. Some of them will be at the top of their cycle and others will be in their growth phase. Another great place to start is CoreLogic's videos on YouTube, where they break down the Australian property market each month in a super simple format. Now, once you've checked out the HTW stuff as well as the CoreLogic stuff, you really want to reduce it down from all of Australia that you're focusing on to either one capital city or one regional market.
So once you've found the right market you want to buy in and reduced it down, step 2 is how to identify the right suburb. Tell us a little bit more about that.
So to identify the right suburb, it really comes down to affordability. From here, then I want to make the decision as to whether I buy closer to the city or closer to the beach. And then at the suburb level, we want to tick some boxes in terms of fundamentals. We want good average household incomes, low vacancy rates. We want good infrastructure, good schools, good access to jobs and transport routes. And then on top of that, if you want to get a little bit more OCD, we want to find suburbs that have a low average annual growth rate in the last 10 years, which is a really, really good indicator that they could be undervalued, which means they could get short, medium, and longer term upside compared to neighbouring suburbs around them. To make your life as an investor as simple as possible, what you really want to do once you've gone, okay, Queensland, Brisbane, let's say South Brisbane at the moment because it's super, super affordable. And then you want to drill it down to about 2, maybe 3 suburbs that you focus on moving forward. So once you've nailed the market and you've got your couple of suburbs that you're focusing on, how do investors find the third step or move to the third step, which is finding the perfect property?
Obviously, when it comes to buying the right property, there's a lot of information out there that can overwhelm you around what you should be looking for and what you should be buying. But once you've got those 2 or 3 suburbs, set a realestate.com alert that basically lets you know when any property within your budget is listed in those 3 areas. You want to make sure that you're buying a property that's got as big of a land size as possible for your budget. You want to be buying a property that is on a quiet street, close to amenities and infrastructure, but not too close that it's going to potentially affect your capital growth. So, for example, you don't want to be backing onto a train line. You don't want to be opposite a cemetery, directly opposite a school or anything like that. You want to know that things are within walking distance or a close bus ride away, but you want to make sure that you're not affecting your property's ability for future capital growth by sacrificing some of these things. Then when it comes to the house itself, you probably want to be focusing on something that's as low maintenance as you can afford. So if you've got a low budget, it might be a renovator, but make sure it's not going to be something that's going to be a complete money pit. But if you've got a higher budget, look for something that's going to be tenant ready immediately, something that's got owner-occupier appeal. So if you couldn't see yourself living in it, if you don't like the street, if you don't like the location, chances are other people aren't as well. So you want to focus on something that appeals to you. Therefore, it's going to appeal to the broader market as well down the line. And just looking for things like the size of the house, the layout of the floor plan, the size of the bedrooms, the functionality of how the house sits on the block. A lot of these things are going to be dictated by your budget. So whether you've got $1 million budget, you're going to get a bigger home or potentially a better area, or vice versa. If you've got a smaller budget, you might be having to sacrifice the size of the house, but make sure you're making the decisions as best as possible based on the budget that you have so that you're not sacrificing things that long-term are going to affect the resale ability of the house or the rentability of the house.
Beautiful. So once you've found that right property, then comes what I think is the fun part of the game, which is negotiating. But for many people, that can be stressful. So explain that 4th step, which is actually getting the house at the right price.
In a hot market like we're dealing with at the moment, negotiating can be really, really overwhelming, but we like to simplify it down to either a 2-prong or 3-prong negotiation strategy. So essentially that means you speak to the agent when you're at the property. You want to get an idea of price expectation as much as they can give you, or some comparable sales if they're willing to give you that, to have an idea of what the property should be selling for. That then gives you a base level as to whether or not you should be coming in quite low, coming in quite close to the asking price, or in a lot of instances, you don't even have an asking price. So you want a starting point to then know where to go from there. So our 2-prong approach is basically start with an offer with okay terms, pretty good price, relatively close to the seller's expectations based on the agent's feedback. Wait for a counter offer or some feedback from the agent so that you know where to go from there. And then a second offer, which is quite a drastic increase in price and a really improvement in terms. So in Queensland, those terms are things like your building and pest clause, your finance clause, maybe due diligence, and maybe settlement. If you can reduce those numbers down, so go from a 3-week finance clause to a 2-week finance clause, or ask the agent what settlement the sellers want. So they may actually need a longer settlement or something like that. You want that second offer to appeal to the sellers as much as possible with the most concise terms and the best possible price based on the agent's feedback that you think is going to win you the property. And that's it. After that, you kind of walk away and play that hardball game with the agent. So we've found the right market, we've found the right suburb, we've found the right property, we've now negotiated on that property. And if we're lucky enough that we've secured the property, the next step, or step 5 of this 6-step approach, is sort of building out your team of advisors and doing the right due diligence before you essentially move forward on that property. Tell me a little bit more about that.
So this is a really, really important part of the process that, to be honest with you, when I was buying my first maybe 3 or 4 properties, I wasn't as across and as serious about it as I am now. For me personally, I want to load the contract with terms that protect me. So the cooling off period, depending on what state in Australia you're in, always having a finance clause, always having a building and pest. We personally like to put a due diligence clause in there that covers about 5 or 6 other things that are important to us, and then settlement terms that are conducive for you and your mortgage broker or bank manager to actually get the money over the line in a reasonable period of time. Now, for me personally, in that first couple of weeks of due diligence, obviously the day that I get the contract, I send that out to the solicitor, I send it out to my mortgage broker or bank manager, and then I immediately book a building and pest inspection. A building and pest inspection is absolutely vital in our business, where we buy sort of 100 to 200 properties per year and have been doing that for a long time. About 1 out of every 20 properties that we buy would have some building and pest related issues and would need to terminate that property. So that would be important for you to note. If the building and pest comes back okay, then you can talk with your solicitor and the building and pest inspector and move forward. But if it comes back really, really bad, you want to be talking to the building and pest inspector and solicitor and having some clauses in the contract to safely move you away from that property, which isn't going to serve you in your future. On top of that, you want the solicitor to be doing a whole bunch of searches. Just talk to them about what they recommend. There's a lot of searches that we get on top of that we've found over the years can help with things like insurance and flooding and bushfires and landslides and things like that. Just to be super, super OCD. I'll often call the local council as well and speak to a town planner and just make sure there's no red flags when they open that property up online that they've identified that the solicitor, you, or the building and pest inspectors missed. And then on top of that, I'll always use an insurance broker that can get me some insurance on the property. Instead of just talking to one company online or over the phone, these brokers can look at 20 or 30 and find the best price and the best coverage for you. And then obviously, if you're going to get an investment property, then getting the property manager through the property. A lot of things have changed post-COVID across Australia around tenancy. It's more important than ever now to get the property manager through early so that they can identify if the property is in a livable condition or if them and the building pest inspector have picked up a few issues, then you may have to do a tiny bit of maintenance before you can legally put a tenant in place. But the solicitor, building and pest inspector, insurance broker and property manager at the minimum starting point. You know, the sixth and final step is something that I, to be honest with you, didn't really do that well when I first started buying property, but do much better now. And that is sort of celebrating what you've done, enjoying what you've done, and also just tying up those little loose ends around management and stuff. So do you want to talk me through the sixth and final step if people are looking to buy in the next 3 months?
So the sixth step is, getting the property managed and tenanted really quickly after settlement, as well as, just sort of chilling. So Ben wasn't great at this. This is the part I'm good at. Like Ben said in number 5, finding that right property manager is really, really important. They're going to tell you if any maintenance is required on the property soon after settlement. And doing that before you find a tenant is important, making sure that it's compliant, safe, ready to rent out. Then they'll photograph it, get it online, and hopefully find a tenant for you within a few weeks. Here in Brisbane, the vacancy rates are really, really low at the moment. So that should be happening within about a month of settlement. The property will begin paying you some income, hopefully covering itself or pretty close to, depending upon where you buy and what you buy. And then, you can kind of chill and celebrate. Let your property manager take care of it. Sit back. You hopefully hear from them a couple of times a year when maintenance is required or tenants may be moving out. And otherwise, you just let it tick over. Touch base with your accountant when you need to. Touch base with your mortgage broker if you need to. And keep those relationships in place so that you know your home loan's working as best for you as possible, and that you could potentially not be getting a better deal or something, but just sort of let the property do its thing in the background while you've got a good manager looking after it, and you can just sort of reap the benefits of owning an investment property.
You know, ultimately, I think it's super, super, super important to treat property as a business and as a process. And by following these 6 steps of identifying the right market, the right suburb, the right property, and then going further and having a really strong process for negotiating, for building your team of advisors, doing your due diligence, and then managing the property longer term, it can just take a lot of stress out of the process, especially for first and second time investors, or for those of you buying in a different state where you haven't had the experience before. Now, for those of you seriously thinking about buying a property in the next 12 months, I'd love to offer you a one-on-one strategy session. All you have to do is jump over to www.pumpedonproperty.com, click that free strategy session button, and we can talk about where you are right now, where you'd like to be longer term. We can share some ideas on where the market's at right now, and then you can go and absolutely smash that on your own, or potentially become one of the extremely small number of clients that we work with each month. But either way, Crystal and I wish you all the best on your journey to buying this property as well as financial freedom in your future.
Woo! That's a wrap.
That's a wrap.
Getting
That's
cool,
it.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?